So we want to get you guys in during the accumulation range, right? That's the main part of buying. And, we use a whole heap of different things that we teach in our course, which is called like wick-off analysis, and it basically teaches you how to catch the bottom of a market before a reversal. And I've managed to do that on so many different cryptos over the years. And also it works really well on stocks as well. Like some of my best trades, Palantir, for example, recently got in at $8 on that. And, that's run about 1,500% since their micro strategy as well. So, it works on stocks as well as working on crypto. And so basically we'll give you guys the breakdown of when we're seeing those ranges forming and, when the entry points are and all that sort of stuff. And so you guys will be able to take that away. So that's the first thing is like getting in and when to buy. So building your portfolio at the start of the cycle.
Yeah.
And the second part then is how to rotate through altcoins at the right times throughout the cycle and being aware of which narrative is going to pick up first. So last year at the start of this cycle, we're obviously very heavy Bitcoin because it's what we always teach. Then we teach our students to focus on what the next narrative kicking off is. We were extremely early to Solana. A lot of us got in around like the $16 mark. Critty had probably the best trade out of any of us in 2023 when he had about 120K profit trade off a Solana entry. What did you get in at, like $12 or $16?
Yeah, something like that. And obviously, same old story. Took profit way too fucking early, but at the time, when you're looking at those levels, you think they're very far away. And then it pulled something out of the ass that actually no one thought it would do, to be honest. So I was really happy anyway. You got to be happy with that all day long.
You can't be upset with that trade.
No, the sleepless nights are worth it, especially.
So yeah, we were extremely early on the Solana rotation, and Solana ended up taking over. And Ethereum sort of died, and then this year, obviously, Solana was sort of dying off, especially at the start of this year because a whole heap of different factors we don't need to go into. But then the narrative started shifting towards being focused on Ethereum. So when Solana was hot, we were all trading all the Solana coins and we're capitalizing as much as possible on Radium had an unbelievable move. I think my best trade last year, like percentage gain trade, was on Radium. I think I put like $2,000 into it and got like $45,000 out of that trade or something ridiculous because it just absolutely pumped so hard. And that's one of the best trades I've actually ever had. But I only bought a small bag of Radium because I could see that Solana was popping off. So I was like, okay, Radium's going to pop off next, right? I'll just pull up the charts so I can show you guys how this sort of works, right? So if we go out. Oop, what have I done here? Stop sharing my screen. What is going on? So,
Orchard runs with Solana too.
hey, Critty, is my screen still sharing?
Yeah, mate.
Oh,
I've got the soul chart on my screen.
I don't know what's going on. Zoom's bugging out on me. All right, we're back. Sorry, we're back. Okay, so basically, this is what we call a trading range down here. I'm going to get rid of a whole heap of these other lines. Right, so we have our trading range down the bottom here, and then the market broke up from there. And Critty's entry was around this point somewhere through here. I'm pretty sure around 18.
Yeah, right at the bottom line there.
So we identified this as accumulation range and then it broke out. And then Solana just went absolutely insane from that point period, from there on, and basically took over the entire narrative. And so when it was doing this move here, what I like to do is then go a little bit further down the risk curve. Like, okay, so Solana's taking over the narrative. So then we want to be on the Solana coins like Jupiter and Radium. And both of those ended up being great trades. Radium way outperformed the Jupiter trade and it took off like crazy. I'll get Radium up and show you. So this is the kind of stuff that we're looking out for, especially for those more like investment style trades. So Solana started taking off and, I got into Radium at about, it must have been around 30 cents or something like that. And you can see like the pump that it ended up having, it just went absolutely crazy, over 2000% move, right? So that sort of like picked up because hey, Solana's moving. Now we want to start adding to a bag of Radium and then we want to be trading that. And then, a whole heap of other Solana coins. Then Solana started dying off and it was obvious that Ethereum was about to catch a narrative and take off. So Solana died off all through here. One of the main reasons was there was a massive shift in psychology of the group. And so what we try and focus on is this narrative shift. So Trump launched his coin on Solana, Trump coin. Everyone was like, oh my God, Solana is the chain of the future. The president just launched his own coin on the chain. The whole market was pumping at this point, and it actually ended up putting a top in the market when they released the Melania coin. And everyone was just like, fuck, this whole thing is just an entire scam. And then that kind of killed the whole momentum of all the coins on Solana. And everybody just all of a sudden stopped trading on Solana because there was just a huge psychological shift. And then Solana had an 86% pullback, right? When we're in Bali, we nailed the bottom down here on Bitcoin and Solana when we're running our event in Bali. And a lot of our members managed to reposition in for the next swing high, which is great, especially for the Bitcoin move. And that was around the 6th, 7th of April. So basically, the next thing that kicked off was at the start of this year, it became obvious that Ethereum was starting to take over the narrative. And so you might be wondering, like, I don't want to be looking at all these charts or whatever. I'm just using the chart a little bit here at the moment to explain to you guys one of the key things that we want to focus on inside the community, which is this part here, which is the crypto narrative flow. This is how you're going to make all your money, focusing on this channel here. It's probably the most important thing because the narrative is the most important thing in the marketplace, because the narrative can control when the market takes off, right? So that's the most important thing, because when Bitcoin runs, everything else follows after it, right? So we need to be focusing on when, and some of my posts back here are talking about that, like timing and seasonality, right? So we talk about that in some of the reports as well, the seasonality. And that obviously affects the state of the emotion of the market as well, right? So that's a very important thing to understand. But then we also talk about the rotation of which project is going to be popular at which time as well. And that's generally what we refer to as like the narrative. And so we could see that Ethereum had been extremely oversold, and it was back down at its bear market prices. So that was similar to Solana being back at around $15, right? Or Bitcoin being back around $20,000, and Bitcoin was at 100K back here, right? So Ethereum had become way too detached from the price of the rest of the market, and it was what we decided was undervalued, right? And then it broke out of a structure here, which is basically called a falling wedge, and it was starting to take off and build some momentum. And so one of the things that we look at is we compare Ethereum against Bitcoin, and we could see that the Ethereum Bitcoin chart had made a significant move, and there was a potential that we were going to get a bit of a move in the ETH BTC chart, right? And because it was also down at like really, really major levels that we hadn't seen since back in 2020. And that was like the 2019, 2020 bear market. And we're all the way back down there. So we kind of had like the full swing to downside, basically deeper than what we could have expected it to go. I thought it would probably hold up around this level, would be the deepest. So it went deeper than what I thought it could go. And then we started to get a new narrative come in, because the Genius Act got proposed, and the Genius Act in the US is the stablecoin bill, which basically regulated stablecoins, and a lot of that has to do with, the government and President Trump's team. They wanted the stablecoin issuers to mainly hold US Treasuries, so they could start to use that to basically make everybody holding stablecoins all around the world basically be buyers of US Treasuries, because you've got China and Russia and all these other countries all around the world selling their treasuries, and that puts pressure on interest rates. So, they're basically using the crypto markets to bring interest rates down in America. And now Tether and a few other companies are one of the biggest buyers. I think they're the 8th largest buyer at the moment. It's probably only going to increase from there of US Treasuries. So it's really actually, I think perfectly named with the Genius Bill. And because it is a genius way to, make sure the US dollar stays strong. Everyone's using it, and it plays on something that's already working really well, which is, people being able to hold US dollars anywhere in the world on their phone. They don't have to worry about being stuck in a currency that's deteriorating. So, for example, like Nigeria or Argentina, that were facing massive amounts of inflation. So what has that got to do with Ethereum? Well, Ethereum is the number one chain that stablecoins use. So as like, this bill got proposed, we got closer to the passing of the Genius Act, it looked like it was going to go through. That obviously means that Ethereum is going to start to catch a narrative. So markets are all about the story. And our job as traders, especially like investing higher time frame moves, is all about picking the narrative before the rest of the market is caught onto it, right? And so that's our job because we're in the trenches. We're constantly, talking to people about this all the time. From when I wake up in the morning to when I go to bed at night, I'm watching CNBC, I'm watching Bloomberg, I'm scrolling on Twitter and seeing what everybody's talking about. I'm listening to guys like Tom Lee and seeing what they're talking about. And one of the things, that he did, Tom Lee's manages a hedge fund called Fundstrat, and they've been doing great things for a long time. He was telling everybody to put 1% of their portfolio in Bitcoin when it was 3,000 back in 2019, and the hosts at CNBC were laughing at him. So he's a good person to follow and get information from. And he started an Ethereum treasury company. Before that, we'd only really had Bitcoin treasury companies like MicroStrategy, which has obviously been unbelievable performer. Last year, it was number one performing stock on the entire stock market. And now they're on the verge of getting listed on the S&P 500, and Michael Saylor is potentially going to become hailed as one of the greatest investors of all time soon. So that was a massive change in the story that basically Bitmain, which is Fundstrat's company or Tom Lee's company that was going to copy the Bitcoin strategy that Michael Saylor MicroStrategy was using to build an ETH treasury. And the basis that they were building on was Ethereum's going to have unbelievable amounts of demand because the Genius Act is getting passed, or the Genius Act had been passed. And then it's going to result in people using the Ethereum chain, and all the banks are going to have their own stable coins. And because they're going to have all their own stable coins, they're going to want to secure the Ethereum network, and they're going to run their stable coins on Ethereum, and they're going to stake the Ethereum network. So they're going to have to buy a whole heap of Ethereum and stake it to secure the network. And that's going to create massive amounts of demand in Ethereum. So from there, we got this pump here and then another massive rally against Bitcoin. And I think Critty probably rode this better than everyone because we were sharing part of his portfolio. I think you moved all your Bitcoin across into Ethereum, and I think you played that one really well. I probably should have moved more of my Bitcoin, to be honest, but yeah, I think you played that probably better than most of us.
It wasn't on the day though. I was kind of leading into it for a few weeks, but I still had a heap of Bitcoin, and I'm just like, you know what, fuck it. Like today's the day. Just by looking at some other charts, which I'll share in the Discord as well. When I see there's a significant move about to happen. But yeah, it's just obviously the more data you can extract from different, sources on fundamentals and different charts we're looking at and things like that, you just gives you a better edge on whether or not on what you should be doing and where it should be going with your capital.
100%. And so then we absolutely nailed that Ethereum move. So we get the Ethereum chart up now, which was basically this move. We started talking about Ethereum being the next mover and taking over the narrative because Solana had died off around this point here. So we really nailed the bottom here. And then, it's been 156% move since then. But when it became really obvious and a lot of us started to go in with like quite large size was after we reclaimed this area here, after we dipped below the range and then reclaimed it. And that's one of the biggest tells that the market's about to send in the other direction, when you have what we basically is called like a failed breakdown. So when we have charts when talking about this sort of structure, with potential upside, it's always one of the most bullish structures that you can have. And so, anyway, it ended up running really nicely. Anyway, the other day I posted something up in here for you guys. The Solana narrative is building. This is in crypto narrative flow, by the way. The Solana narrative is building. The chart is also looking strong, and I'm expecting it to play catch up to Ethereum soon and take over the narrative again for a bit. As long as it holds this trend support, I need to be bullish on Solana. So this is the chart anyway, and it had a really nice trend support, and we're pushing into one of our key levels. So this is one of the indicators that we've developed, and it's basically a Goldman Sachs strategy. And the whole idea is when you break out of this level here, which is called the value area high, the market becomes a lot more explosive to the upside. And so that's what we were looking for here. Solana to break out of the value area high, and it was sort of compressing underneath that level with the rising bottoms just coming higher and higher into that level, and eventually it either breaks the trend line and you have it rolls over, or you have a push and it breaks out to the upside. So let's jump in and just have a quick look. 1 second. Get my right chart up. Right, and so if we're going into the 4-hour time frame, I basically posted this when Solana was somewhere around this area here, and we've had a really nice move since then on Solana. So it's about 20% move since then. So these are the kind of things that we're always trying to watch for and seeing like which narrative is going to take over next. And obviously, again, because this has started moving, think coins like Radium have started moving again, and then like Jupiter had a really nice move, and so as Solana continues to push, if it can break above its previous all-time highs and get above 300 and move into price discovery, all the Solana coins are going to play catch up big time because Ethereum's kind of taken off. A lot of the Ethereum layer 2s still have a long way to move as well, but overall the entire market is quite bullish. And one of the things we want to be looking at is the others chart. We've had a breakout of the value area high here on the others chart, but when we get back above pretty much 347 billion here, that's when I think it will really start to move because it's the previous year's value area high. You don't need to worry about that too much, but basically when we break out of this level will be quite important. And then one of the ones that Critty likes to bring up a lot as well is, and you were posting about this just I think yesterday, is the others versus Bitcoin chart, because when this starts to break out and become more aggressive to the upside and move into an uptrend again, that's basically a signal to us that alt season is kind of starting. And that's when in the crypto game, that's when we make the most amount of money. So we want to be more allocated to altcoins when the others BTC chart is looking like there's a potential breakout or is breakout and moving to the upside, right? Because as we can see back here, last cycle in 2021, this move back here was, about, what is that, 380 days or something like that. So it's about a year that altcoins were outperforming Bitcoin pretty aggressively, to be honest. So, hopefully we'll get a full year of that kind of action and we can all massively increase the amount of Bitcoin that we're holding before the end of the cycle. That would be quite nice, but who knows? It's definitely not promised. The other thing that we like to look at is the total 3 chart as well, which is pushing into all-time high phase as well. So if this can break out and move into all-time highs, that's a really strong signal. So the other part of the narrative that I just want to go through with you guys is, obviously September's running a little bit as well now. I might just pull this actual chart up on my screen. Let's coinalize. 1 second. So this is the monthly returns chart, and you can get this from coinglass.com whenever you want to. But we'll be posting about this a lot because it does affect the market, and it's just basically giving us basically what we call this seasonality, right? And so we'll talk about this in the seasonality report. And the reason why we crypto traders, we're always talking about this seasonality thing is because depending on what month of the year is, you want to kind of be behaving a little bit differently. And typically August and September are the worst 2 months of the entire year, with October and November pretty much always being the best 2 months of the year. And that comes down to the fact that in the US, they go on holidays, June, July, August. So all the hedge fund managers come back late August and, they like to push the market down. And then usually they rebalance in September, and then they put a bottom in the market in September, and then higher low comes in October and then starts to push to the back end of October. And then it just flies from there for the rest of the year. And that's a typical trend that we do see a lot in the market, which is why if you come and look down at these averages here, they're absolutely huge for October and November, where it does most of the work for the entire year. February is also a pretty good month, and so is March. February, March, April, but it's got nothing on obviously the 21% average that October has, and then obviously the average for November is 46%, but that's kind of created a bit of an outlier by the 2013 run, which is 449%. So if you look at the median, it gives you a little bit of a better figure. And that's why we say still the 21% in October is still the best. So yeah, that's why, we try and be positioned mainly for this October move. It's definitely the time of like October, November is typically when we make the most money out of the entire year, right? So understanding that when we're looking for trade setups or something like that, or we're looking to be positioned, we can have a lot more confidence if it's the end of September, start of October to be going into those positions, because it's much more likely we're going to have really strong upside. Then you combine that with what's going on with like monetary policy and macro analysis, which we're about to jump into in a second. Right, and that's in this tab here, and obviously it's in the macro part of the research report as well. But this is what I was just posting about over the last few days, talking about FOMC and potential for rate cuts. We like to use the Fed Watch tool. So if you want to ever pull this up for yourself, you can just type in CME Fed Watch and go to the link, and it will pull this up, and it will tell you what all the traders are betting on is going to be the rate cut for that next meeting, right? So we're at a 95 or 96%. There would be one rate cut, and the market, the Federal Reserve almost never goes against this. I don't, in all the years that I've been watching the Fed Watch tool, I think it's only been a surprise once. And they do what, 6 or 7 FOMCs a year. Maybe they do 8. I'm not sure. But they do a lot of them anyway. And typically this is always correct. And obviously it was again this morning. So the big thing that we needed to watch though was the dot plot, which I'll pull up for you. 1 second. If I can get it to load. Here we go. So this was the September 17 dot plot. Let me just zoom in on this. And this was the June 18. So this might be a little bit confusing to understand at the moment, but the longer you're in the group, the more of these you see, they'll start to make a lot more sense, right? So these were the dots on June 18, and what the dots represent is where the one dot is one governor's vote, and they vote for where they believe that interest rates are going to finish by the end of that year. So we can see in column 1, it's the year of 2025. In column 2, it's the year of 2026. Column 3 is 2027. And then column 4 is longer run. So it's like multiple years compacted into one. What we need to focus on is typically just the current year, right? But because we're at the back of the year now, we're moving into Q4 in a couple of weeks. Really, like 2 weeks, we're going to be in Q4. So we need to also start to focus on the 2026 year a little bit as well, right? The 2027 and longer run, I really don't ever really pay that much attention to, so you don't have to worry about that. But it's usually typically the only thing you need to focus on is the current year, because they're so inaccurate with these things and they change so much all the time anyway, it doesn't really matter, which you'll learn once you see these multiple times over the months. So the big thing here that we were looking for today was how many levels down, right? Because every level you go down is another rate cut. So how many levels down is the average going to end up being when they release the next dot plot? So the dot plot comes out, it's usually every second FOMC meeting. And the last one was in June 18. And obviously the one today was September 17. So the big shift down was if you look here at the 4.0 level, right? Most of them were saying through here that we're going to be 3.75 to 4.0. Right. And then so they dropped a full rate cut down. And then we had a lot dropping from no rate cuts basically up here down to the next level lower as well. Right. So we had a full shift down, which is quite interesting to see. And so this basically locks in, a lot of people were expecting either 1 or 2 rate cuts for the rest of the year. So we got 1 today, but this is telling us that there's going to be 2 more rate cuts. So there's going to be 1 in the October meeting. There's going to be, which is October 28th. And then there's another one on December 10th. We'll get a rate cut then as well, which means it's bullish for markets. I think I talked about it in the last research report. If not, I think I may have posted it in one of the channels. Here it is, talking about the total amount of money that's in the money market funds. So money market funds is just basically a place where people park their cash and they get a return on it. And it depends, the amount of return that they get on that depends on the interest rate, right? And so when the interest rates start to drop, you're going to get less money on your money market funds. And so basically what happens is people move, when the interest rate starts to drop, people move out of money market funds. They stop putting money into the money market funds because the return isn't big enough anymore. And then they start to move that into risk assets. Some of that will go into stock markets, some of that might find its way into Bitcoin and other crypto markets as well, right? So where we've sort of been at the moment, it being in a pause, because I'm not sure if you remember, but last year they cut in September, and then they cut in October just before the election. Trump won the election, and then they stopped cutting in December. And so we've been on pause since then. So, and that's kind of why Bitcoin has underperformed, and it's kind of why for this year it's been one of the worst years ever for Bitcoin, especially in a bull market anyway. One of the worst bull market years. It's been quite slow, but I think we're about to play catch up now, and we're going to price everything in that built up demand and built up, pressure that we've been waiting for, because we've finally got the floodgates open now. Bitcoin trades so closely to what's going on with liquidity flows and what the Federal Reserve monetary policy is. In my opinion, I think this year has proved it as well. It's one of the most influential things on the entire market, more important than things like the halving, which most people say the halving is the most important thing. It definitely has a lot of impact because it removes a lot of supply from the market. But I think each halving, it becomes less and less important by 50%, because you're cutting the amount that it affects the market by 50% every time as well. Okay. And so then the more important factor comes into being liquidity flows, and what Federal Reserve is doing with things like interest rates, quantitative easing, quantitative tightening, right? So anyway, they're still actually in a tightening phase. I was surprised to see that, to be honest. I thought that they were going, they had said that they were going to wrap up the tightening phase of this cycle by the end of June. They haven't done that. They're still taking money out of the economy. And I just want to pull something up and show you guys on that.
I was a little confused when he mentioned that this morning as well. When I was watching, I was like, wait, hang on.
Yeah, you guys said you're going to wrap it up end of June. And it's like,
Yeah.
why are you still taking money out?
Why aren't you pumping out bags yet?
So we'll just go open a new tab. Balance sheet. Right, so we can see here, and this is what put in the last market cycle top, right? And in like our course and everything like that, if you've gone through it, I do a full breakdown on like selling the top and everything like that. We also have a sell the top webinar if you just want to learn about, what I look for when selling the top, and we can give you guys access to that. That's a really, really good training. I definitely would suggest having a look at that if you want to learn about this sort of stuff and help you make decisions around the cycle top. But obviously, we'll be giving you all the information. We're looking at it in real time anyway. But anyway, the reason why the last market cycle top got put in was end of 2021. We started to go we started to get too high in inflation. We got to 6.1. They said it's the highest inflation in 40 years. We're going to have to stop quantitative easing and move into a tightening phase. And that ended up putting the top in Bitcoin. Then we had an 85% correction from 69K all the way down to 15.8, right? And so this is what they were talking about when they said we're going to end quantitative easing and start quantitative tightening. And this is the Fed balance sheet. And they've actually removed about $2.3 trillion now from the economy and taking that off the balance sheet, right? So that's basically going out of the economy, out into the banks, and then the banks get it taken off them by the Federal Reserve is one way to look at it, like in very basic terms, right? So what we're looking for here is one of the things that will be bullish, because it's slowed down. The rate that they're taking out, I think it's like 5 billion a week or something like that. So it's like progressively slowing down more and more how much they're withdrawing from the economy. But what we're eventually looking for is this to slow down and go sideways like it was back here, and then eventually start to ramp up again, which is probably going to happen maybe end of 2026 or sometime in 2027. So that idea definitely lends more to a much more extended cycle, because if we start to have quantitative easing coming in the end of 2026, it's very hard for us to have a full year bear market and a recession in the rest of the economy, and a really big pullback on the stock market. I think a lot of people are saying like we're the yield curve inversion, all that sort of stuff, and so you have to have a recession. Well, we had a recession in 2022, and the government just lied about it and pretended that we didn't. Because I'm sorry, but the definition of a recession is when you have two negative quarters of GDP in a row, which we did have, and then they just made some bullshit term up saying, "Oh, it actually wasn't a recession." So, and then there's still people saying, well, we still need to have a recession because we didn't have one since the yield curve inverted. And so you look on all the charts, there's no big gray lines over where, which indicates a recession on those charts. There's no big gray lines indicating a recession since we've had the yield curve inversion, but we actually had, we had a technical recession. Their argument was that it was because unemployment didn't go up high enough while we're having the negative GDP. But how the fuck are you going to have unemployment going up when you just printed like $5 trillion and injected it into the economy? They added an extra 40% of all money, not just in the US dollars. Australia did it as well. They did the same thing in the UK. They did the same thing in the EU as well. So it's like, how are you going to have unemployment rise? But GDP was still crashing. So anyway, that's my little argument about that. So what we're probably going to most likely see is money flood out of the money market funds. And that'll be one of the first most bullish things. And that'll be happening as interest rates are coming down. Then eventually what will happen is this will start to flatten out more and more, and then we'll start to ramp up slowly. And then that'll probably be towards the back end of Trump's presidency. And things will run really, really hot when we do get quantitative easing kicking in. But, we can't just rely on quantitative easing to make the market pump. I always feel like it's like the weak, it's like, because it's the last leg in the cycle of the economy, right?
Can you think of a scenario where they might bring that forward?
Yeah, I mean, it would only be if GDP was slowing down and unemployment was rising.
Okay. Because after 2018 on that chart, like as it was coming down, it was kind of pretty sharp when it reversed as well. So I'm just kind of thinking.
Yeah, through here. So, this was basically like, I don't know if you remember, but 2017, 2018. Well, I mean, like we had the big pump with crypto going absolutely nuts, and the stock market was starting to overheat. And they were trying, because everyone was complaining that the balance sheet had been going up too quickly through here, which was 2014, and like look at it previously as well. This is obviously post global financial crisis, and everyone was talking about the debt crisis getting so out of hand. So everything's they finally start. Donald Trump came in and created all these amazing policies, which finally stimulated growth. Before Obama left, he was like, Donald Trump, in one of his speeches, one of his exit speeches, he actually said Donald Trump thinks he's just going to wave a magic wand and get above 2% GDP again. It's like, it's not going to happen. The days of that are never coming back. Trump came in and changed all the regulations and got rid of regulations and slashed taxes and things like that. And, the market ended up taking off and became quite hot again. And that created a little bit of inflation, and it created GDP growth again. And then, the Federal Reserve saw that and they're like, wow, we've finally got to a point where the market's growing. We're finally getting off zero. Maybe we can start to lift interest rates and take some of the balance sheet back. And that's what ended up putting the top in 2017 in the crypto cycle, because they moved in basically at the start of January, very end of December, they moved into quantitative tightening. And the crypto market topped out December 17. So...
well, there you go. And obviously it just skyrocketed with the pandemic.
And obviously, they actually had started to reverse already, because it did too much damage, and the market, the economy wasn't ready, and they started to pick it back up. And obviously Trump was forcing them, to like this is what they call a taper tantrum event. But anyway, then obviously COVID kicked in and they had to inject massive amounts of capital, like very, very fast, because they didn't let anyone go to work. So they had to replace all that GDP with handouts. to keep everything flowing. So, that's kind of what happened there. So, that's sort of like longer term stuff, but hopefully it'll make sense more and more as we go on. But back to we'll finish off the point on the dot plots. So because this dropped down, it's signaling that we're getting more rate cuts. But the thing I want you to bring your attention to is this dot down here, which is a very, very, this is probably the most important thing that happened to the whole of FOMC. And this is one of the guys who was economic advisor for the White House. He actually still works for the White House. I've forgotten his first name, but his last name is Moran. And so he's part of Trump's team. And they got a woman out of the Federal Reserve recently, and they replaced her with him just the other day, so he could still vote. And this is his vote there. So now the head of the Federal Reserve at the moment is Jerome Powell. He's been in, I think it must be close to 8 years now, because Trump appointed him in his first term. That was before Biden came in, so he's been in all the way since then. So it'd be like maybe 8, maybe 9, 10 years. And anyway, his term of service wraps up in June next year. And so then potentially this board member here, governor of Federal Reserve, potentially could end up replacing Chair Powell, which would then have massive impact on how fast they're cutting rates. And obviously Donald Trump and the Trump team think that rates are way too high. A lot of people I really respect as well in the macroeconomic space, like a guy from Queen's Cambridge University, Mohammed Al-Arian. He's a really good person to follow if you want to learn more about macroeconomic stuff on Twitter. And then also watching him on Bloomberg and CNBC, he always has really insightful, good, non-biased things to say. And he's been extremely critical of Powell recently for missing the cuts and taking too long to put these cuts into place. And he thinks that they should have cut 50 as well. Obviously, Moran thinks they should have cut 50 as well. And, the whole idea is that, the next group that comes in to take over running the Federal Reserve, which will be replaced in the next 6 months, are going to be much more what we call dovish. And a dovish Fed means that they're going to do things that are going to stimulate the economy, stimulate growth. And the whole idea that Trump's team has now, because they first came in, or hopefully you remember with Elon Musk, they won the election and he came in, they were going to do Doge and they're going to be like really harsh austerity measures and they're going to cut all this spending. And then obviously, they did everything they could and they only cut like $150 billion or something. Even if it ended up actually being that much, who knows? But basically, Elon figured out that you can't, it's almost impossible to cut the funding out of this thing because it's just too deep. The tentacles are just too deeply entrenched by the deep state to remove any of that, like spending on absolutely useless things. So basically the idea moving forward is the only way to get out of this massive debt pile that they're in, because they're $35 billion at the moment, and then they just also voted to increase the debt ceiling by another $5 trillion as well with the big beautiful bill. So that potentially puts them up to $40 billion of debt. So their plan is to spend big, fill that $5 trillion of debt. But the idea is that they're going to stimulate the economy so much and they're going to ride the coattails of the AI boom. They're going to ride the coattails of the robotics boom, which are going to replace a lot of human jobs. But we're going to have not just humans. So one of the biggest constraints of GDP is that you rely on humans to produce for you. Now, that's not going to be a problem in the next few years because now you're going to have infinite amount of robots running around and AI, computers inside people's computers doing extra jobs. So you're going to have so much more production that they believe that they can stimulate the economy so much and they can grow their way out of the debt, which also means that we're going to have inflation. They're going to let inflation run a bit hotter than usual. Instead of getting it down to 2%, it's going to probably run between 3 and 4%. And so everything is like assets are going to go up a lot over this period of time. And they're going to slowly eat away because that's $35 trillion of debt today. But if you inflate everything, that ends up debasing the amount of debt that you have. So that 35 trillion isn't going to feel that big in 10 years when you've inflated everything so much that isn't really as much as what it's worth. So basically, you only end up paying back like 75% of it instead of 100% of it. Yeah. So that turns that 35 trillion into like 22 trillion. It's much easier to pay back. And also their plan is to grow the GDP so much that you get rid of that deficit. So that's the plan. So I think it's very obvious that that's going to pick up in the middle of next year quite rapidly. And that means that things like Bitcoin and gold, the stock market, property prices, are all going to continue to be very, very strong and run very, very hot. So yeah, that's why I don't think that we're going to have we're going to have a recession next year, and that's why I don't think we're going to have a crypto bear market next year either. So I think this is, what we learned today is definitely sort of lending to that idea. Something can always break in the economy, and so you have to play the data live when it's coming through. So we always update you guys when anything is happening. But the thing that we need to watch for is unemployment getting way too out of control. And if they can't bring unemployment down, that's when we start to have problems. And at the moment, it's not too much of a problem. GDP is still really strong. Unemployment, we are starting to have a few issues, but it's nothing too crazy. Dropping interest rates is the first step to fixing the unemployment issues that they have at the moment. So I think they're still in a pretty good position, and things will be pretty fine moving forward.
Yeah, I think it's really important to I'll just touch on what you just said too. It's really important just to, watch the data live, whether it's through us or you want to have a crack yourself as well. But you guys are in our community. I'll definitely be keeping up to date with these reports, because one thing I've learned with working with DAX is you got to be watching the data live, because you can't just have one bias and just stick to that for 2 years, 18 years, 4 years, like the 4-year cycle. Ask Dax 2 years, 3 years ago, he probably will be calling the top now, but obviously things have changed. And he's, making decisions based on, data from other outsources and things like that, just to keep ahead. So it's really important not just to have a bias, set out over the next 6, 12, 18, 2 years, 4 years, or whatever it might be, but just to make sure that you're keeping up to date with what we're seeing, just so you guys can make decisions on how you guys approach things.
Yeah, 100%. Like, the best way to trade, in my opinion, and invest is to focus on the live data coming through. That's why I always try and say, like, I try not to predict anything, because things change so much. It's like, you're just waiting for the data to tell you. I think that's the best way to view it, and, like, remove all bias and just be like, okay, well, I'm going to make shifts. I'm going to have a bias while the data is telling me to have that bias. And as soon as that data shifts to something else, then I'm going to flip my bias with the data, because you rely on the data to set the trend for you, rather than just being like, oh, because there's a 4-year cycle in crypto, the market's going to top out in November 2025, which is what we even teach that in the course, because that was what was looking like was likely back in 2023. But now so much has changed, especially with Trump getting into power this year. And so, the playbook is just completely different moving forward. So you just have to focus on what the data flows are telling us. And, that's how we were able to nail the top back in 2021, because we were one of the only groups that was focusing on what the live data was telling us. And we weren't just trying to have a bias, because almost everyone else was biased that we're going to run to 100K. That was like very, very popular narrative in the crypto markets, that we're running to 100K. And then obviously they came out and said, we're going to go into quantitative tightening, and everyone just didn't listen.
And then it matched up with what we're seeing on the charts as well.
And it matched up with what we were seeing on the charts as well, 100%. So, you combine both of those factors, and, you override your emotion, because that's the hardest thing. You get so caught up in the emotion, and if you're not focusing on what the data is telling you, you just believe your emotion, which your emotion typically works against you. When you're feeling the best, when you're feeling unstoppable, when you're feeling invincible, that's usually when you need to be selling. Yeah. And that still happens to me today. Even like when Solana, I was showing you that Solana pump when we ran to like 250 or something like that from about $18 in a pretty quick amount of time. I remember, made heaps of money really fast off that. And I was just like, I remember coming in my front door, and I was just so exuberant. I was just like, fucking hell, this is the best feeling ever. And I was like, oh, fuck, it's probably going to top out. So, and we literally ended up, that Solana run ended up topping later on that day. And I was just like, I fucking knew it. Like,
yeah,
it's always, and that's why we do the emotional state of the market. We do that part of the analysis, which is here, the market cycle of emotions. That's why we have that as part of the brief, because I think it's really important. And so the whole idea is, I feel like that's one of my best skills as a trader and investor, is being able to understand my own emotions and be able to tell when they're wrong. and being able to understand also the market side, what the market is feeling and the emotions of the market. Because, I mean, when I caught up with Todd the other day, I was explaining to him that in the Facebook group, when I posted about the potential top being put in, there was like 180 comments on that post, and mostly people telling me to go fuck myself, and that I'm like destroying their futures and their coins and whatever, and people arguing about me being wrong. And that's part of it. That's the sort of stuff. That's the sort of crazy stuff that happens when you're at the top of the market cycle. Because people are so emotionally invested and emotionally high strung. And obviously, we're not saying that at the moment. So I think we've got a fair bit to go. But I just want to bring your attention to the on-chain analysis stuff. Typically, the on-chain analysis stuff, we'll pick out a couple of key things that we see that I like to follow, and anything else that we see that might be slightly interesting each month to look at. And then we'll match that up with the market cycle of emotion stuff, because typically they kind of go hand in hand. What the on-chain analysis will tell you will be very similar to what the emotion state of the market is at as well. So it's like, in this report, we talked about, the state of the emotional state of the market is we're sort of in that, like, starting to come up, it's starting to build. We're sort of in that optimism and belief sort of area, starting getting ready to take off towards the back end of the cycle. We're not in euphoria or thrill or areas, but if you go and look at where all the on-chain analysis stuff is saying, it's basically all saying exactly the same thing, right? So it's like, I don't really look at too much on-chain analysis stuff, because I can understand where we are on-chain and all the on-chain metrics. I can basically predict where they are just by telling how hot the market is in this emotional state. We're going to give you those anyway, just so you guys can see what I'm going to be talking about, what we're going to be talking about in our emotional state reports, but then also have the data to back it up as well and be like, this is what the data on-chain analysis is showing, but then this is also what we're feeling and seeing in the marketplace as well, and we can match it up. And I think that gives you a really good structure to understand where we are in the market cycle. That isn't just, hey, I think this. We also back it up with the data as well. I think that's really powerful. Somebody trying to say something or ask a question?
No.
All good, all good. And then, we have all the research reports of actual projects. And so these are projects that we like the look of at the moment. And a lot of these will also match up with charts in there as well. So like Near, for example, we did a research report on Near. And, this is a really nice one at the moment. I'll go pull up the chart on this one. So, yeah, I think that looks like one of Chris's charts, and it looks like we're building a really nice range down here. And if I go and pull up this chart right now on Near, you can see, pardon?
I said your list is so neat compared to mine. I got like 50,000 lists with like fucking 5 tickers on them.
I know. I feel like I need to clean that up a little bit as well, but
no, I need to go through it.
I'll get into it soon. But yeah, it's basically the same thing. So, it's just been extended a little bit further than what we had seen when Chris's chart was showing. But the key thing here that we're watching for is the VWAP. So this is our indicator that I was talking about earlier. And this is the main indicator that we use, because it gives us such a good market map of what's going on in the entire ecosystem and space, right? So we're just going to clean up the chart a little bit and get rid of some lines that we don't really need. So one of the biggest things that we look for is the market making lower lows through here. Then what we want to see is when we flip into an uptrend, right? And so we kind of did this here, made a higher high, but then it failed and rolled over, right? So then this is what we call a trading range or an accumulation range. And at the moment, the accumulation range is basically this is what we call the selling climax. So it's like the ultimate low that starts the trading range. And then this is what we call our automatic rally. And that comes up and basically sets the top of the range high, right? And that's coming really nicely and obviously hit a key level I put in from somewhere back here. I'm not sure where that's from, but seems to be an important level, but it's mainly probably just from this consolidation in here rather than that line. So just get rid of that.
Also, Colin, you were talking about Solana and Radium earlier. I don't know if y'all noticed that um, Orca was doing pretty much the same thing Radium was doing. It was around like 50 cents and went, you know, above $8. It's real similar to what Radium was doing
Yeah,
in
nice.
that same time frame, except it was actually behind. So you could have made your money on Solana and rotated to Radium and then rotated to Orca and 10x it all.
Very nice. I love that. Orca's not really one that I actually have been following that much, but I might have to put that on the watch list now that you've mentioned it.
Yeah, and I get in that one.
Yeah, nice. Because potentially that will keep playing out as well if on the next Solana move. But yeah, I just wanted to
Mm-hmm.
highlight what's going on with here with Near because I think it's a really great chart showing a lot about how our strategies work. Um, and so yeah, this is what we would call a trading range. And what you ultimately want to see is eventually you break out above this level through here, right? We don't need to worry about too much about that. The moment, the most important level is where our VWAP is. And so you can see how good. So this blue line that's drawn on my screen through there, that's actually designed by our indicator and put on the screen by our indicator. I haven't drawn that in. And so then the value area high is a standard deviation above that, and then the value area low is standard deviation below that level, right? So we call this our VWAP. You can see every time prices come up to the VWAP, it's rejected from that. So it'll be very big if we can break above this VWAP level and start to clear basically $3.25. Then the next big step will be to break into these two. We've got combined levels basically at the same area, just under $4, which is our previous year value area low, which is from last year's VWAP, right? And then the developing, which is from this line through here, the value area high. So basically, once we get above $3.90, that's when we expect that this is going to start to rally very aggressively. But we like to get into these a little bit early and start to build our position while the market is going sideways. So that's why we've written a research report about NEAR so you guys can learn a lot about it, but then also you can see what's going on in the chart as well and see that, the opportunity that we're seeing because typically when charts are going sideways like this and it's a good project, once they break out of their range high, they get above the VWAP here, right? That's sort of like a good entry trigger. Then once we get above a value area high level, which would be above $3.80, that's kind of like the next area. So, potentially something happens like we flip this and we come up and we put in, say, a bull flag or something like that through here. And then we take off from there and it'll probably get a lot more bullish once it finally breaks out from there and we go into a strong uptrend. So markets typically are doing one of three things. They're either in markup, they're distributing, or they're in markdown, right? At the moment, we're in accumulation phase. The next phase after this is going to be markup and then distribution and then markdown again. We try and get into things early when they're in accumulation before they break out into markup. And that's kind of like the main trades that we want to be taking in the investor group. So I think this is just a really good example I wanted to share with you guys. And that's kind of why we wrote this report about it so you guys can learn about the project. Because when you understand why the project actually exists, what they're doing, then you match that up with what's going on with the chart, it gives you a lot more confidence to actually, take that trade and hold it. Versus if you're just like, oh, what is this thing I'm even holding when it doesn't run? You see other things running. It's easy to just be like, oh, I'm just going to sell it and buy something else that I know what it does. So yeah, that's the beauty of having the individual reports. So yeah, that's pretty much the main stuff that I wanted to cover. In the next session that we catch up, I'll be going through the new report that we've just written. And, a lot of it I just sort of mentioned to you guys, especially the macro stuff. We covered it, majority of it just then. But yeah, we'll be writing the research report soon, and there'll probably be new stuff that we think of over the next few days. And we'll have a set of new coins to teach you guys about as well. Yep. But yeah, that's pretty much it for tonight. Does anyone have any questions I want to ask?
I was wondering if you ever checked into the info I sent you on the real estate stuff about Ondo. Did you ever look into that?
Yeah, a little bit.
Yeah.
I think we probably should write about Ondo in the next report. I think.
Yeah, I don't know if the other guys knew, but I was reading about it, and Trump and his family are real big into real estate, and they were trying to come up with a way that people could, like buy housing and stuff using crypto, and you could um put your crypto down as collateral instead of having to do a down payment, and then you didn't have to sell it, so you could still be letting it grow. So it's kind of like you borrowing against it, sort of using it as your collateral to buy your real estate. And then they chose Ondo to be the coin to do that with. So,
Yeah, it's pretty awesome. So like
mm-hmm.
you can hold Bitcoin or Ethereum or whatever it is as your collateral to then get a loan to buy real estate with, and then you can hold the real estate and also hold your crypto at the same time. So you're not like it's not like you have to sell and cash out your crypto and then miss out on the gains.
Exactly.
Converting
Yep.
Bitcoin into USDT or into Australian dollars for us, and then buying a house with it, you can still hold your crypto and get the gains from that, and also hold the real estate at the same time with the buy the real estate with
Yeah,
the.
because you can pay your mortgage with your gains, or you can just let your assets grow and pay your mortgage, and then you still have your Ondo at the end.
Yeah, it's pretty awesome. The only danger is obviously they have to be pretty highly collateralized. But the only danger is like when we go into a bear market. So things like that are amazing in a bull
Yeah.
market, but then you can get caught out in a bear market if you don't sell at the right time and the liquidity issues and stuff like that. But I think for people that know what they're doing, it's an amazing resource to be able to use without having to sell and lose out on assets because we're moving into such a great and important time, I think, to be holding as much hard assets as you possibly can have because they're obviously, what the government has already told us that they're going to do by they're going to inflate away the debt and try and outgrow the debt.
Mm-hmm.
If you're not
Well,
holding
that's
assets,
why
you're
I
going to
was
get
thinking.
screwed.
Well, that's why I was thinking that it would do well, because if that does go over, and a lot of people are doing that, they're going to be holding their Ondo and not selling it.
Yeah, 100%. I think Ondo is one of the best projects out there. That's for sure. I think it's going to do really, really well once we become a little bit more bullish back end of this year. So we'll definitely include Ondo in the research report. Yeah,
Yeah, it's still pretty new. I mean, it hasn't been out that long.
yeah. I mean, we've been trading it a fair bit. It's definitely one of my favorite. I've got a decent bag. I mean, it's not massive. It's about 30 grand US, I think, at the moment. Not a huge bag, but yeah, that's about what I allocate to altcoin bag at the moment. So yeah, potentially I need to build on that when I get some more
Yeah.
available funds.
Hi everyone. Sorry I'm late,
Here
but
he is.
Hello.
Ondo's pretty good. That was my best Trump election trade, I think.
Yeah.
I just bought a shitload of Ondo and a whole stack of other stuff, but Ondo just went crazy, and I dumped most of it. But yeah, I've still got quite a decent amount now.
Yeah.
But
Well, it had a huge pullback, so
yeah. But yeah, it went up crazy, and it was just a short-term trade for me at first, and then I did some research, and then I went, oh, actually, maybe I'll just hold on to a bit. So it's
Yeah.
it's working out well at the moment. But yeah, it's a good one to load up on for
The
sure.
Ondo BTC chart looks great as well. I've been looking at that.
Oh, does it?
Yeah.
Yeah, I need to do a bit more of that. I need to get onto the BTC charts and
Well, I bought my Ondo at 12 cents, so I'm still holding it.
12 cents. Nice.
Yeah.
entry. I've bought and sold it many times. I think
Yeah.
this was I got in through this trading range. So like to give you guys an example of the kind of stuff that we try to get. This was another trading range that we had sort of in the middle of last year when it was at August through to November when the market had a really nice push, right? A lot of us sort of like had various trades through Ondo through here. Then we had a big sell off in the middle of last year, right, into a trading range, and then you break out of the trading range. And once you have established these trading ranges, when you break out of them, like it pushes very aggressively, very, very quickly. So like that was basically what I was just explaining to you guys what we're looking for on near, for example. We're kind of like in this area here at the moment on near, or maybe we're around here on near. Ondo now doing pretty much the same thing back here, but just a larger version of it. This is also what you call quite a large inverse head and shoulders as well. So once that kind of breaks through that level through here, but once again, developing value area high, previous year value area high around this $1.20 area. When that flips, we break the neckline. Right, when we flip out of this, that's when it'll probably start to take off. So, using our indicator system to, give us that market map on telling us when we need to be involved in the market, when we want to be out of the market, can be really, really handy. So, we'll obviously update you guys on the projects that we're following with that sort of stuff as well, what our market map with the value areas is telling us. But yeah, obviously this is a really good one. But let's get it up, Ondo versus BTC.
I think Tim was trying to ask a question too before. Was that right, Tim? Or
Oh no, it was all right. Well, the question I had was just in regard to kind of looking at things daily from from the different chats. So that what was it, the crypto narrative flow is an important one to look at daily. Is it?
So the narrative, actually, those crypto narrative flows, they actually take a long time to play out. So it's
Right.
like for like the narrative was Solana for like 6 to 8 months last year. So you do it wasn't really like something that like changes very rapidly.
Yeah.
In alt season though, it can change a lot quicker, but it's not like it's not an everyday thing. It's like, hey, this looks like it's going to be the focus of the market, and then that will run for a couple of weeks, and then you'll shift to something else and shift to something else. And it's difficult to catch every single narrative, and it's difficult to be early on everything, and sometimes we'll be late to get out of them and whatever.
Yeah.
But obviously, we'll do our best to play it as good as we possibly can and rotate through the different projects. So there'll be like a real world assets narrative, and Ondo will pop off, and there'll probably be like real world assets, and DPIN will probably run at the same time because DPIN is for decentralized infrastructure, right? Decentralized physical infrastructure, which is basically similar to real world assets. So those two will run at the same time. So we're looking at like DPIN and real world assets projects running at the same time. They'll be like, okay, Solana looks like it's going to have the narrative now. Ethereum looks like it's going to take over the narrative now. Solana layer 2s are playing big catch up right now, so that's what we're going to be focused on. So it'll be that kind of stuff.
Yep.
One of the tools that you can use and it's an app where you can get on, just your computer, that Banter Bubbles or Crypto Bubbles. There's different apps, but they go by like the top 100 or the top 200, and you can also choose ecosystems and narratives, and those bubbles will start turning green. And then if you're on there and you're like, oh, I see near and render and AI stuff starting to come off, so you can kind of still catch it early like that too. That's what I use.
Right.
Yeah, I used to use the Banter Bubbles thing for a while. Crypto Bubbles is the other one, isn't it? Which I think Banter Bubbles is the same.
It is. They just Banter branded theirs, but
yeah.
I use the Banter one because you can go through there and select your favorite coins and save them, and then you can check on them and like just go to your favorites and see which ones are starting to turn green, and then you can kind of get a common denominator if you know what your coins are, and then you can catch that narrative early.
I haven't looked at this for a while, actually. Wow, what the hell is Asta? 284% today.
you mean you didn't get on that, mate?
No, missed that one.
We all did. We got on at the start of. Maybe you should get on time.
Yeah, maybe.
We might have to start especially when we get closer to the alt season. We can start talking about that sort of stuff as well.
Yeah.
Just to wrap up, Ondo BTC, we can see we're getting rejected again at the yearly VWAP. So once we can clearly clear that out and get back above this level 3, which is the previous year value area low, we can reclaim that level. That will be quite bullish because that would also trigger us being into an uptrend, proper being into an uptrend. Because one of the biggest things that we focus on is being in a downtrend or in an uptrend. It's like one of the first lessons we teach in our course. It's like lower lows and higher lows, and a lot of people just disregard it and they focus in on the low time frames and miss it completely. Which is why I wanted to put it at the very start of the course to really drill it into people how important it is. But once you break this high here, that's basically a confirmed reversal into an uptrend. And so, we look at this bullish structure setting up here on Ondo BTC. I'll give you another example of the same thing on Dogecoin. So, and when Doge starts to run versus Bitcoin, which it looks like it's going to start to build, we've got this really nice inverse head and shoulders pattern through here, right? When this starts to finally take off, which it's really trying to get going at the moment, and push back up to these levels, and if Doge runs really hard, then that will definitely trigger a narrative for meme coins to start outperforming the rest of the market. So that would be another example of a narrative. And then when the meme coin narrative kicks off, sometimes it can be a bit of a trigger for being the end of the cycle. But things have definitely been a bit different this cycle compared to the last ones. And we had meme coins running really hard for a long time, like last year, which is like middle of cycle, and it kind of didn't make any sense. But it was mainly because of Solana was pushing so hard, and they've sort of become a completely different thing compared to what they used to be when it was just Doge. And then a few others sort of popped up last cycle, but this cycle has been much different with this sort of stuff. But yeah, at the end of the day, we're looking for Doge BTC to get outperformance and rally versus Bitcoin, and then that could kickstart a meme coin rally again. So yeah, that's the kind of stuff that we look at, and we'll be including in all the reports, everything like that. And so yeah, we'll have the one report released each month, and then maybe a week after that or something like that, or maybe that week when we release the report, we'll jump on and have a talk about it, and you guys can ask any questions and that sort of stuff. So,
Can I just chime in quickly and just ask one really quick question? I'm moving obviously out of some of my BTC and ETH into some other alts at the moment. I'm just trying to play with how hard do I go? Do most get totally out of BTC and position into
wouldn't be completely out of Bitcoin. Yeah, I would.
Sorry,
I wouldn't be completely out of Bitcoin. So the chart that you want to watch is the Bitcoin dominance chart, right? And we're sort of moving into the stage where alt season is getting triggered. That's for sure. And like if you go and look at like the altcoin index chart, it is saying that we're in alt season at the moment. But I kind of maybe we're just getting started. So we obviously want to be starting to move more across, but there is still a danger we have some sort of a push like this because Bitcoin hasn't really taken off in a long time. So going sideways from almost the entire year. So Bitcoin runs, we could see it suck back a little bit of market cap from the altcoins for a bit. And so I wouldn't go too heavy just yet, but I think it's like time to start bleeding across. I'm probably still like 45% in Bitcoin at the moment. And then the rest of it's very heavily in Ethereum as well. And then, it's further down the risk chain with small bags of everything else. Because we haven't actually really got full confirmation that we're in alt season just yet. Like a lot of these things that, we're just looking at like, Doge, for example, like it's still just getting out of trading range. Like, near, for example, like that's still like in its trading range. When these things start to break out of their trading ranges and start to push, like, you want to already have been building a position, but then once you get the confirmation, we're moving into markup with all these projects. That's when you can move a little bit more across and sort of like, step 1, step 2, step 3, step 4. And then, you start to rotate back into Bitcoin again.
And when you are in full blown alt season and it, are you still holding about 40% of BTC and ETH? Like, is that sort of still your main, or are you actually more allocated into alts at that stage?
Like total, I'll always have a separate bag of Bitcoin that I would just never touch. But then, in trading accounts, for example, that have like live on exchanges, like last cycle, I was definitely 100% in alts in my trading accounts for a while. Yeah. And like it'll kind of be obvious because like Bitcoin will be like pumped and it'll be going sideways. And typically what happens is Bitcoin pumps and then goes sideways and all alts fucking send. And so it's like, why would you hold Bitcoin while it's going sideways while the alts are sending like hundreds of percent? So it's like, that's when you go the most heavy, when you go almost fully into altcoins. And then when the altcoins running really hard, I'm rotating back out of the altcoins back into Bitcoin. And then usually Bitcoin takes off again and the altcoins go sideways for a little bit while they're waiting for Bitcoin to finish its run. And then it sort of goes backwards and forwards like that multiple times. And then eventually you top out for the cycle. And usually Bitcoin finishes topping out, then altcoins, some of them have already topped. and then some of them have one last push and then die. And when they die, they nuke really, really hard, which is why, when we're getting towards the back end of the cycle, I try not to be too only in altcoins unless I'm really confident. As soon as I'm starting to get less confident in altcoins, I'm moving more and more across. So last cycle, I had one account which is 100% in altcoins, and I had another account which is like maybe 50% Bitcoin, 50% altcoins. And then when I'm like, fuck, I think we're topping out here, I opened up my Binance account, which had only altcoins in it. I sold every single project that I had in one go. And then I actually I didn't go back to Bitcoin. I actually went straight back into USDT. And then the Bitcoin that I did have, I slowly sold that off over the next, week or two, and ended up exiting it like really, really good position because all those altcoins that I was in, literally like 2 weeks later, were down like 60 and 70%, some of them. So like that's the danger of altcoins. And so I want to be like, especially when we're late cycle, I'm like hot potato with the altcoins because they spike really quickly and they dump really quickly. Like look at NIR just this year, for example. Like, it had a really, really strong 125% pump, but then, in 17 days had a 44% pullback. So, like I just don't feel super comfortable when we get to late cycle being 100 because, the danger is that like you miss the top for some reason and, you take too long to correct out of it and you get caught in like really illiquid bags that dump off super fast. So that's the risk. And I try to be like balanced still and a bit like hot potatoing. So, it's like you kind of like in some projects that are pushing really hard, then going back to Bitcoin. Then, you might relay some of that Bitcoin again back out to another project or something like that that's looking really good for that next move up and then go back across. But it's kind of like, how do you want to play it exactly? How much risk do you want to be taking? How much you're focused on the actual market, how late we are in the cycle, all that definitely factors into it.
Cool.
Yeah, I was looking back at the last cycle and some of those ones that popped off early on the alts, they just ran really hard and then that's all they ever did. And then some of them kind of just were steady the whole time. And then other ones were right at the end and it was about a 2 month gap. So like Kyle's saying, you just gotta, watch for the hot potatoes and the popcorn popping and take your profits and roll it into something that hasn't gone yet that you're confident it's a good project because it's a super big gap of when they run.
Exactly. Yeah.
Hulk had a question in the chat box there. What do we think on FTMX? I don't know what that is. I just put that ticker in and I couldn't see anything. So
It might be Phantom. Well, they changed it to Sonic though.
This one, FTFC. Hulk, can you maybe clear that one up for us?
Are you seeing that on the bubbles or something?
Where's getting FTMX from?
New blockchain.
New blockchain.
Nick.
I have heard of FTMX. I don't know. I've never really.
He just popped up and said it's a new blockchain.
Yeah.
Mm.
I don't know. I don't know enough about it to be honest to really comment on it.
If there's not a chart, you probably won't get much of a out of us anyway because it's just too new of a project. It's got a lot of legs that we'll need before we can make good decisions on it.
And so just so you guys understand, like this is what an alt season looks like. So like this is like where most projects are at the moment. They've been doing this kind of stuff. And then when alt season starts, this is what ends up happening to projects.
Yeah.
It just gets so much more retarded than you could ever have imagined the price going to. So like, this like had a 6,000% pump and then, we had the mid-cycle pullback and it pulled back 82%. And then it had another pump and ran another 2,000%. It's fucking
So
insane.
this alt season that sort of looks like it's coming up now, that's just sort of a smaller alt season within the bigger
I think,
within the bigger
yeah,
picture.
I kind of think we might be about to do something
No,
like this one here, and then have another
that
bigger
was
one
probably the
when we
previous
have like.
season.
So this one like is a result of quantitative easing. This is a result of 40% of all monetary base getting printed in 2 years. We're not really there yet. We're not really at that type of like massive liquidity flows just yet. I think if Bitcoin runs to like 350K, we'll start to see this sort of stuff happening in altcoins though. Because you think about it, it's like when the narrative pops onto one coin, you have what will now be, back then it was billions of dollars, what will now be trillions of dollars, trying to get stuff. It's like a bottleneck. You're trying to stuff billions of dollars through a funnel, and it can't get in. And the result is the price just splurges out like this because everyone's trying to get into the same coin at the same time. You have the entire crypto industry being like, hey, the narrative is these type of projects, and everyone just tries and buys all as much as they can of those projects. And you have, a couple of week period of time where you have like, this is a 2 week period of 300% move. This is another, month move. It goes for 200%. So it's like, those type of moves pop off. And if you got in down low, it's 90 days, a 3 month period for 1,400%, even if you didn't catch the exact bottom. So yeah, that's how it kind of ends up working out. Like Rose was the same. Like have a look at Rose last cycle. Absolutely insane. So Rose was a new project last cycle and it had like, listed, did really well, nice 500% move into an 80% pullback. And then it went again for another 1,100%.
Yeah, whatever happened to Rose? What price is it now? Fucking hell. This is why you don't marry your coins.
Yeah, exactly. I mean, I traded this one heaps through this move here, which ended up being like 350% move. I caught it just after he reclaimed this low. So I was just sort of like looking at this selling climax. This is obviously a spring. We came back and bounced off the top of that spring, but then when we reclaimed the selling climax level, got back into it. So I got back into this one at this point here. I got into Theta and Nia all on the range low reclaims, and they were really, really good trades. So Theta is the other one that I caught. That was awesome. Same type of thing, right? I caught this one down here on the reclaim. This candle here, just as like the narrative was starting to pick up that we were going to get bullish across the board, right? And
yeah, that Rose coin's a privacy coin and it does NFT stuff. It's called Oasis, and I think one of the times it pumped really big is when that Ready Player One movie came out, and they were talking about the golden egg and Oasis, and that's when it pumped.
there you go.
A little bit of pop culture to add to the mix, eh?
Yeah.
Nice.
Anything can create a narrative, like and like this cycle, people trying to force narratives, like so that Donald Trump statue today out the front of the White House or wherever it was,
Yeah.
the gold and Trump holding the Bitcoin. That's because somebody's like made a project about it. It's like trading on Pump Fund, which is
there's actually another one that's in the background too, pushing not tokens but blockchain. I think that's what Hulk is talking about after looking at this FTMX token, right? There's one that's on Instagram. It gets pushed a lot by Aussies, travelers, and stay-at-home mums called Arbitrum, and they think it's the next Bitcoin. And the market, and they've given away Lamborghini and shit like that. It's this massive thing, and they don't encourage you to buy the token. You got to buy their bots that mine the token, right? And it's the biggest scam ever. And you get commissions if you can sign someone up to buy these bots and stuff like that. And they honestly think it's the next Bitcoin. So yeah, there's a bit of that going on too. And that's why I found this token Hulk just shared, and it just reminded me of that. So I'll just stay away from anyone just like, invest in the blockchain, not the tokens. It's just like,
Sounds like
just
an
like you've
old
been
school
listening to.
pyramid scheme.
Yeah, big time, man. Big time.
They think WorldCoin's gonna be the next Bitcoin now.
Yeah.
WorldCoin.
Yeah,
Pretty sure it's not.
no, I'm just saying what they say.
So Theta Coin, Theta token is AI project. It had a couple of nice
Yeah.
runs, but yeah, we're in a trading range once again, like similar to what it was back here. So when this breaks out of the trading range, that might be another nice trade, especially when we get the AI narrative picks up at some point, which I'm sure it will over the next 6 months. We'll get an AI narrative. Theta will be one of the ones to look for that. Like Theta and Nia both tend to do well when the AI narrative picks up. So just knowing that like these projects are in trading ranges like this, when they're starting to break out and their narrative is picking up, that's when it's like, easy money to get a quick rotation through them. So yeah, if you guys want to play like more higher time frame, like you just want to get positioned, in whatever project it is, not worry too much about the narratives, and then just wait for them to pump, and then you sell and rotate back to Bitcoin, and then when we think the Bitcoin cycle is topped, you can just sell that Bitcoin and rotate back to US dollars. And that's the easiest way to do it. More hands off. You have to worry and stress too much about any timing or anything like that. If you do want to time things a little bit better and have a few more rotations, you want to outperform a little bit more, then you can totally do that and pay more attention to what narratives are happening. And like, obviously you need to know how to read charts a little bit as well to pull that off quite well. But, yeah, it's up to you guys.
I know Theta's starting to do stuff with esports, and it's actually an American coin, but it's not even on Coinbase yet. So I think that's probably coming this season.
Well, the Coinbase listing would be pretty big for Theta.
Yeah.
Very nice. Well, yeah, let's wrap it up there, guys. If there's no more questions.
Let's do it.
Yeah. Too easy, guys. Thanks a lot for tuning in tonight and joining us for our first webinar with the investor series. And we'll catch you all on the 30th. Will be the next presentation. So we'll see you guys then.
Thanks very much. That's very good. Thank you.
Thanks, guys.
Thanks, guys.
Bye.
Thanks, everyone.
See you, legends.
Gotcha. Have a good night.